First of all, a very warm welcome. Good morning, good afternoon, good evening to all of you. Thank you for joining this TCS Bank's webinar on digital banking. I think it's kind of cliche to say that banking is undergoing a transformation. We all understand how much this transformation is driving very fundamental change in the industry. And pretty much all of this transformation is technology led. If you look at the last 5 years and if you look at the future 5 to 10 years, we are in for some very, very significant changes. I remember a time when I was a child and the banking was a very personalized service. It was available very in a limited manner, just when the branches were open. But we had personal relationships with the people with which we banked. And it was pretty much, I would think, a very different model in terms of the bankers were a part of society, even I would say. And it was a very different world and era in which we grew up. And if you contrast it to what is happening today, banks are pretty much always on. Banking as a service is always on. It's become a lot more invisible in terms of how we access it. And what happens behind the scenes is largely invisible. The whole technology paradigm has meant that experiences can be highly personalized to the context of each customer. The power of data and AI is available to make sure that even though it is not a personal interaction, the interaction is highly customized to each person's requirements. And the whole era of open banking, APIs, has ensured that there is a lot of real-time interaction between banks and different players in the industry. And that's leading to a lot of ecosystems. And I can go on, but I will stop here to kind of get the event started and get it rolling, because we have three very, very distinguished panelists today whom I want to introduce and then kickstart the discussion to get some perspectives on the topic. First up, we have Steve Weston. Steve, thank you for joining us over from Australia. Steve is founder and CEO of Volt Bank in Australia. This is a startup bank which has been in business in the recent times, and of course, Steve will talk about more of that, in shortly. Steve has 30 years plus experience in banking. He has worked with multiple banks in Australia. It's St. George, NAB, Barclays. I think the last he held leadership roles in Barclays UK in the retail banking and mortgages side of the business. As you can see from the picture, one of Steve's favorite pastimes is tennis. I guess his weekend games of tennis are important for him to get going. And I will leave Steve to leave who wins those matches, tennis matches, right? I wouldn't want to spill the beans on that. So Steve, really, really appreciate you taking time. Thank you for being on the show, on this event with us. Thank you. We have Sven Eggefalk. Sven is CEO of Länsförsäkringar Bank in Sweden. It's a predominantly retail bank, and Sven has 25 years of experience in banking. He started his career in 1995 and he's worked with a couple of other leading FIs in Sweden before joining the Länsförsäkringar group. He became CEO in April 2018, if I recollect, and I remember, Sven, soon after you took over, you came to India and we've discussed the transformation at your bank at length, and we were at that time in flight with the transformation. And I remember how much a lot of leadership and how much hands-on involvement you had in the program, which was key to the success of that outcome that we delivered for you. So thank you for being on this event. And of course, I must say that you see Sven there running the TCS flagship event in Sweden. We have a 30-kilometer cross-country race called the Lidingö-loppet, which we are trying to sponsor off. And that is Sven for you, I guess, somewhere in the middle of that run. So thank you once again, Sven. Love to have you on this program. Thank you. Gal, so welcome to Gal Bar Dea. He's CEO of First Digital Bank. That's a bank in Israel which is in setup. And Gal is an MBA from Columbia University. And Gal's bank is, by the way, planning to launch in 2021. But Gal has got a lot of interesting and varied experience in multiple startups, in large banks as well, trying to set up new banks. And Gal's personal interests are, I found them coincidentally very much similar to mine. I mean, he's a great student of behavioral economics. I think he teaches also at some universities and so on when he finds some time. And Gal, I recently read Richard Taylor, and I'm sure you will use all that is there in that book to nudge customers to your new bank when you form this and get ready to go next year. So thank you all. Thank you to all the panelists for coming and joining us in this event. It's a privilege to have all of you. So maybe with that, let me get started with the questions right away. And Steve, I would like to, maybe my first question is to you, Steve. First of all, I guess you can start with the tennis note if you want to really talk to us about the game of tennis that you had this weekend and who won in that. But my question to you really is, if you look at Australia, it's an advanced market, unlike I contrast with something like India, right? India has a huge amount of unbanked population. Even those who are banked, the kind of banking services they access, there is a lot of room to go. But you are in a very competitive market with a lot of people already, getting services from the large banks. There are 3 or 4 large banks in Australia. What really, prompted you to start a new bank to be a competitor to the existing large incumbent banks? What did you see as the drivers behind that? And give us some insights to that. How do you went about thinking about this and conceiving this whole bank? What was the founding premise?
Thanks, Venkat, and I should say thank you very much for the invitation to speak today. Firstly, on the tennis, the result was like it normally is. I lost. I'm not sure why I put myself through 25 years worth of punishment most weekends. Some things you just don't learn, but my wife was very, very happy. I am a career banker here in Australia at some of the big banks, and as you said, my last banking stop was at Barclays Bank in London, and I always had a view that banking could be done in a better way, and there are plenty of people that will tell you that. Truth is, I got tired of my own voice, and I said, mate, if you think you can do a better job, why don't you stop talking about it and go and scratch an entrepreneurial itch and do that. And I did that a couple of years ago with a wonderful team. There were really 2 motivations, and the first was, what will customers both want and particularly need from banks in the future if those same customers are to live better financial lives? And that's what we've gone and designed and are building, and we're looking forward to the months and years ahead. So that was the first motivation. The second was a technology question, and that was, what will banking technology or retail banking technology of the future look like, and go and build that. And when we looked across the world at all industries, clearly platforms have become ubiquitous, but not so much in retail banking. And what we have done is we have built a retail banking platform that serves 3 key roles for us. The first is it provides the banking products and other tools that help the customers need to live better financial lives, whether we manufacture those ourselves or whether we insource them from best-in-class providers. That's the first role of the platform. The second is really interesting, and that is to offer our technology platform and banking license and balance sheet to corporates who have access to large customer bases, and they want to offer banking or payment solutions to their customers or to their loyalty members, but they don't want to become a bank or can't become a bank themselves. And that will be the majority of our customers will be sourced through our partners, and they include PayPal, the Cotton On Group, who are Australia's largest global retailer. More recently, we've announced a partnership with State Bank of India here in Australia, and we have a number of other partners where we will work with them. The banking products and solutions are offered through the partners ecosystem. So a very big part of what we have built here at Volt. And the third and the final role of the platform is probably the most interesting, but it's one that will have the longest gestation period, and that is licensing out our technology to other banks, initially here in Australia. If we can prove out that model here, then that will become the international play for Volt Bank, licensing out our technology to other banks. It seems it doesn't matter how big a bank is or where they're located. Everyone grapples with this notion of being able to digitally transform. We know that it's awfully hard to do from within. History has shown us that. And our hypothesis is, if somebody like Volt can build banking technology of the future and it is designed in a way that others can leverage it, then that's what we should look at doing. So a very differentiated proposition, and I'm sure we'll talk more on that throughout the session today. But thank you.
Great, Steve. I think you've touched upon a lot of key elements which I think will set the stage for today's discussion. You spoke of the customer experience and what the customers want, and I think I like the way you put it. I think your motto says it all: to help customers. I think you say be better off and live their life to the fullest, right? So I think it's very catchy, and I think you touched upon many things like platformification. You spoke about partnerships and ecosystems. I think in a way you've touched on some key aspects which we will lead into this discussion with, and that's good. Thank you so much. And I had to put you on a spot there with the tennis thing, I guess. I hope that's okay.
Thank you.
On that note, let me quickly switch over to Sven. I mean, Sven is on the the other side of the spectrum, if you will, right? He's running an established bank. He's one of the guys you're up against, right, Steve? The likes that you're up against. I mean, yeah. So I think he's got a bank running for many years, and as we see it, Sven, in this industry, we see banks adopting different kinds of ways to tackle the idea of digital transformation, right? There are incumbent large banks who transform from within, who change their own technology platform. There are some large banks who have said, no, I can't change my technology, let me start a new bank, right? That's another approach some people have taken. Of course, there are people like Sven, like Steve and Gal, who've come up and put up new banks to take care of to kind of leverage the opportunity that is existing in the marketplace. You took, I would say, it's a tougher approach, I would even think, right, from your standpoint, to transform digitally from within. And it's a decision you took not now, but maybe many years back. You initiated the search for a partner many years back, 5-6 years back. You started the project maybe 4 years back, so well before today. And today you are actually in a place where you have using a new platform for some time. So tell us about what went through your mind. What challenges did you see in your previous landscape? Why did you undergo this? What is often thought of to be a tough journey, right? And what's been the effect of that? What's the benefits you're seeing?
Absolutely, Venkat, and I'm happy that you took the picture that in the beginning of the race and not at the end of the race. So, but absolutely, we actually picked a path that was fairly challenging for us. But I'll explain why. But just give me a short picture of the Swedish market so that you can grasp how it looks like. The banking industry, and I would say mostly throughout the world maybe, but in the Nordic, has been under change for many years. The characteristics of the Swedish market is similar to what we see in the rest of the world. You have a group of larger players and you have a group of smaller players. And the smaller players, or the niche or neo banks, are either universal banks, like retail banks, or they focus on specific segments or customers, like Steve told us. LF Bank, as you said, Venkat, started in 1996, and it was the beginning of the internet era. And if you look at the Swedish market, here's where you find most of the players right now. They began in 1996. From that point of view, retail banks. And it was also at the same time the era of bank insurance. LF Group, Länsförsäkringar, has more than 200 years of insurance business. Insurance business, mutual company, local business in all regions. So it's from that context we started the bank and launched a complete internet bank in 1996. At the same time, we open up 130 branches at the same day. The last 10 years, and it's kind of in just to, I don't want to brag, but I want to tell the story. The last 10 years, we have won 8 years the most satisfied customers on the Swedish market. So it's been an impressive journey. And at the same time, we are one of the fastest growing banks in Sweden right now. So back to your question. In 2015 and 16, we decided to undertake the largest investment in the history of our bank. And that was to build a new platform. And it was to undertake also the digital journey that we could see in 2015. At that time, the driver was payment, the infrastructure in payment. And it was, of course, driven by PSD2 regulations. And what we could see becoming the digital bank as such. And at that time, we did pick TCS as a partner for implementing this more modern core banking system. And it is and was at that time a partnership for us entering the future of digital banking and what we now tend to see the ecosystem. And the aim is, of course, to be digital and local at the same time with superior customer focus. I often refer to, and that has to do with the ecosystem. The LF group is almost like an ecosystem itself. We have the insurance business, we have the pensions, we have the retail banking services on both SMEs and private clients, and we have the fastest growing real estate agency. So that is what we focus on.
Thank you, Sven. Thank you, Sven. I think that's a different perspective coming from you. And when I contrast it with what Steve spoke about, and let me go back to Steve a little bit here. So, Steve, you just heard Sven, and I'm sure the banks in Australia are no different when it comes to parts of, in a way, their own ecosystems and their own established spaces that they are in. Right? They have the customers with them. They have a lot of allied products to sell. Customers go to them for multiple requirements. So for a new player like yours, you have to be a lot more innovative, a lot more differentiated. And you spoke about some of that in the beginning. So I just want to pick on this word. How do you really think of this word innovation? What does it mean to you? And where do you think innovation will come in the future from people like yourselves? And how do you challenge these established banks?
Great. Yes, so Venkat, in Australia, we have 4 major banks who represent about 80% market share, and then a number of smaller banks. So that can be quite daunting as a new player. And there are times where I actually envy the larger incumbent banks, and there are other times I'm glad we're doing what we're doing in Volt. So the advantages, of course, of a larger incumbent: you have millions of customers, you have access to capital. As a new player, you have to find those customers and you have to find that capital. That doesn't come easily. Then where the neobanks tend to have an easier time is the pace at which you can move. So with the bigger banks, even if there is a really, really positive intent to build some sort of a neobank type business, then quite often it will get caught up in the bureaucratic operating model of the bank. So at first, guys, go away from the mothership and run really, really quickly. And you get to a certain stage, and then the mothership says, you have to attend a compliance committee, a risk committee, an investment committee, and suddenly you're in working at the pace of the mother, which was not the intent. But that's just kind of how it is. In terms of then how do we compete, the first thing I would say, we don't need to become the 5th biggest bank in Australia to have a valuable and a successful bank. But when we were designing Volt, we looked at the areas that a digital bank like Volt could outcompete against the large incumbent banks. And we focused on those areas where there were richer veins of profitability. Volt's brand, and you would think that the majority of our customers were millennial and we have good interest rates and we help people budget and save. We do all of that. If I look just at our consumer deposit book, more than 40% of our deposits come from customers over the age of 55, which people naturally wouldn't think would be the case when you look at Volt's brand. In 12 months' time, when we look at our deposit book, what we'll find is half of the deposits come from businesses and cash management accounts that are managed by financial advisors. Well, that's not what I think. What about lending? How do you make money? That is one thing we have in common with the incumbent banks. Our economic model is that we raise deposits and we pay an interest rate of this, and then we'll go and lend it with mortgages and business loans and consumer loans, and the net interest margin is what we pay the expenses and then return profits to the shareholders. So it is the same. But it's not just customers that are joining us across the mobile phone, although that will represent about 1/4 of our business. 3/4 will come from our partners who I spoke about early on. and even our mortgage origination, we will work with mortgage brokers who have a very strong value proposition. So we respect customer choice. If customers want to see a mortgage broker and find out the best mortgage deal for them, that's cool by us. We also will work with non-bank lenders. So the largest non-bank mortgage lender in Australia will originate prime mortgages that meet our credit policy. We will provide the funding, and what that does for us, it helps us get to scale more quickly than if we were just relying on our own steam, and it helps us to get to break even more quickly than it would have otherwise. So the brand of Volt, cool and funky, and then when you look actually beneath the blankets, it's a very different looking bank, and it's one that we started with a clean sheet of paper and said, where are the areas that we can outcompete, and let's go after those rather than being all things to all people.
I think clearly we, that's good insights, Steve, because under the hood you are a very different bank. I think that's for me the takeaway. While you are a bank for all intents and purpose, and you compete in the same space, but under the hood you are built yourself to be a very different kind of a player, and that's, I guess, where the technology comes in as well. And when it comes to technology and thinking of technology innovation, I think we always think of Israel as a country itself, right? It's been a startup nation. It's been it's kind of powered so many startups and entrepreneurs and so on. It sells technology to Silicon Valley, right? So I think let's bring Gal here on this question. Gal, if you look at the technology in Israel, I don't need to say. I mean, it's been the leader for so long. But in banking, it's only now that the regulators and the government have decided to open up the sector for banking. So can you share some insights on that thinking behind this? I mean, why are they opening up this? You have a fairly robust banking industry. So what's the thinking? What are some of the drivers of the change there? And give us some sense of that, sense of the environment. What is the market anticipating with the banks like yourself launching?
So first of all, thanks for the invitation, and we're very happy to participate, and we're very happy about the partnership with TCS. Absolutely. Maybe a little bit about what we're trying to do, and I think that maybe can relate to what the government is trying to do here. But we believe, and I think Steve talked a little bit about it in the beginning. We see an opportunity to build the next HSBC. I think or Citibank. I think the stars have aligned in the last 7 years from a regulation, technology, consumer acceptance perspective, and it's probably the first time in history that somebody can build the next HSBC. And I don't think I have a lot of respect for traditional banks, but I think banking, maybe insurance, are the last industries where you have the leaders being companies that are over 100 or 150 years old, and I think that's about to change. And I think what we're trying to do is build a global bank that is born in Israel, that is powered by AI. Some of them, as you said, from a technology perspective, we built a very robust team of technology people with banking people. Our main shareholder, the owner, is Professor Amnon Shashua, who's a global AI leader who built Mobileye, the foundation of the autonomous vehicles, and he has 3 other AI companies, and he truly believes that AI is changing and eating the world. So we are bringing that into the way banks works. And we're focusing on changing, or let's say fixing, the business model of a bank, the operational model and the service model, through putting AI basically wherever we can in order to do 2 things. One is to reduce the amount of people who work at the bank. We think that banks can and should run on a fraction of the people and a fraction of the cost that traditional banks run. Bank, at the end of the day, is a technology company. Okay, there's hardly any cash going around in most markets. So banks are zeros and ones that are moving between places. It's basically code, right? And maybe once in a while an ATM. It's a technology company. There's not much. There shouldn't be much human labor. So we're working very hard on automation and AI tools to reduce the back office, the call center, all the manual procedures. And on the flip side, from a consumer perspective, we're working very hard of putting smart technology, as Steve said, to enable some customer experiences that are not available today. And I think one of the main benefits that we have, and this is, I think, very much related to working with TCS, is I think only in the last several years there's been the possibility for banks, especially new banks, to decouple the need to work on a core system and to build a great bank. Because when you're trying to do everything, it becomes a 5-6 year project. You're trying to build a core and technology and customer service. And I think working with with TCS and TCS banks enables us to do what we do best and work probably with the best partners in the world to allow them what they do best, which is power the banking core. And this is a great opportunity that wasn't there before. It's only in the last couple of years that there's been the whole notion of banking as a service, the understanding that a bank doesn't have to manage and run and develop and operate its own banking system. And I think this is we see all the digital banks kind of coming up in the world slowly. But I think this is one of the major movements that has started this whole banking revolution, this decoupling of the core, putting the smart experts on managing the core, partnering with the right kind of companies like TCS banks, and enabling the bank itself to do what it does best, high-end technology and customer service. So that's kind of what we're trying to do. And I think the Israeli regulation and the Israeli authorities have realized that in the last couple of years. I think it's very much like Steve said, that happens in Australia. There's about 4 or 5 banks holding 80% of the market. Israel is a very innovative market, also in banking. There's great digital apps and there's great digital services. It's not about necessarily the customer experience, but I think it's about building a bank right in terms of the cost structure, in terms of the culture, in terms of the time to market, the speed, the agility. It's not necessarily every time I meet people and I tell them about building a digital bank, the first thing I say is a digital bank is not an application, it's not an app, it's not UI, it's not just a customer experience. I think what happens under the hood is 10 times more important than what happens above the hood, because it's the ideas are the easy part. That's why I tell my people all the time, we're going to have an idea today, a different idea tomorrow, customers will want something in 6 months. Is how fast can we react? How fast can we move? So if we build the infrastructure right, we can move much faster. And the regulators in Israel have realized that that's the core problem. It's not about the application, it's about the infrastructure. This is why they granted the first banking license in 42 years. And this is why they also support very, very strongly the setup of a banking bureau, banking as a service infrastructure led by TCS to enable us and perhaps hopefully other players to run forward and focus on what matters the most.
Great, Gal. I think great insights, and surely, I'm sure we'll hear a lot more from you in the years to come. But on that note, you spoke a lot about data and AI, and you of course referred to Professor Amnon Shasha, who is well known as an inventor and as a pioneer entrepreneur. So talking of AI, a lot of this depends on data. And the moment you hear data, right, one dimension that always comes to my mind is the whole debate around privacy and where do you draw the line between where data is nice to the customer and where it becomes a little pervasive, intrusive, and when it becomes a little a little bit challenging. What's your take on that?
It's a great question. I think it's a pretty simple answer from my perspective. I think data becomes a problem when your business model is not aligned with it. Data is not a problem. Data is out there, and data is a good thing if you use it right. And I think the reason there is conversations about data and privacy is because of a balloon that blew up in terms of business models that are based on exploiting your data. Okay, there's companies who collect your data and give you great value, right? And even value you pay for it, and everyone's fine with it. Okay, Netflix collects everything about you, and they know which show you like and what happens on the 6 minutes, and when do they have to show the hero or the bad guy. Everything is database, but everyone's happy because their business model doesn't exploit the data. It uses the data to give you a better business, and they ask you to pay. So when your business model is you are the product, right? Like we see with some social networks, or even we see with some banks around the world. Well, like one of my takes on digital banks, I think one of the challenges they have, some of the digital banks I see that are doing great, at least on the books, is that when you offer free banking, completely free banking, it means that in a way the customer is the product. And we see around the world, I see in Europe, I see in the US, consumers are starting to ask, who pays for this free banking? How do you make money? something is wrong here. And people are being very afraid, right? Because when you give them something for free over and over, they start to think about what's behind the scenes. Where's the smoke? What are people hiding from us? So it's something, you know, we haven't launched yet, but it's something that we are thinking a lot about, because we are a data company. We're an AI company. We're using a lot of data in order, as I said, to make our processes better, cheaper, faster, and a lot of data to make the customer experience better. But we are very strict on aligning the business model, that we don't have any loopholes. That even if we collect data or we aggregate data from other bank accounts or pension or whatever, or bring everything into our dataware, our business model has nothing to do with using your data, selling your data, aggregating your data anonymously. And I think this is the line that consumers will, I think they understand now, but I think more and more companies will talk about that and will put that at the front, saying, yes, we're collecting your data, but our business model is aligned. When the business model is not aligned, then it becomes a problem.
I think that's a great insight, Gal. I think you are the product is probably a bit of a gray area, especially when it comes to banks, where people trust the banks a lot with their money and with their hard-earned savings and so on. That's clearly a line that you have to be very clear about. Sven, let me bring you in, back on the conversation, because I think we heard from both Steve and Gal about how they are in a way pushing the boundary, right, if you will, of what is possible in banking, pushing the boundary of what incumbent large banks are doing and how they can do it, they can do things very differently, do things better, and so on. How do you see it as an established player? Do you see, let's look at banks, fintechs, the whole rise of new digital era companies, if you will. How do you look at them? Do you look at as collaborators? Do you look at them as competitors? What do you think? How do you think this will settle down? Where will this settle down? And how do you see the sense of direction on this whole question of how banks like yourself will perceive these new age players, if I may call them?
That's a very challenging question, but I'll try to simplify it a little bit. So what I tend to see here, you will have, if you look at it as a matrix, and you have one axis on the left side, and you will have the traditional banks, the established bank, you may say, with large customer base, with the trust, as you mentioned, Venkat, but also a huge amount of data. Those are entering, of course, and try to be agile and innovative. And then on the other axis, you have the neos, the fintechs, the challengers, you might say, inside or outside the banking industry. And those are the agile and with great user experience. So both of these axes are trying to get grasp upper right corner. The upper right corner is where you find the fintechs already. They're already there, some of them. So what's going to happen in this market? This is just my personal view on the market right now. The one that has the greatest possibility of creating superior customer experience will win. And by that, you must understand what customer experience is. That's the whole business here. The customer experience is the sum of all interactions, both direct and indirect. It doesn't matter if you partner up with someone or if you are the interface yourself. It's the sum of all interactions. The second part is that customer experience is both rational and emotional. The interesting part here is that emotional satisfaction will turn out to be, the customer will be more loyal over time if they are emotional engaged. The third point is what you have today, and Gal was on that spot. What you have today, the customer will take for granted tomorrow. So focus must be on constant change and make sure that you have the right customer insight throughout the customer journey in the whole organization. It doesn't matter where you are, you have to have the same customer insight. And that is AI, because you can get that fast. And it doesn't matter if you're big or if you're small or if you're agile or whatever. if you have the right context within the organization, you will be successful. And lastly, of course, make sure that you include sustainability, because what will be at the end of the day will be, what do you add for this world to become better? So you have to have sustainability within this. As for fintechs right now in the Swedish market, I would say we tend to see a consolidation, and we tend to see a partnership more closely with the banks or with the ecosystem. And if I look, for instance, when I talked to Steve a little bit in advance, I mean, Volt has the advantage of being agile, and I like what I hear. They don't have the legacy like the established banks might have. But at the end of the day is the winner will be the one, and that is my advice. Focus on the customer, not the technology. Focus on the customer, focus on the customer journey, and make sure that you pick the right partners or the ecosystems where you are. Or if, like us, you are the creator of our ecosystem, but you have to be on both sides. So my advice is customer focus, customer centricity, that will take you to the winning spot. And then, of course, you have cost efficiency and AI on all that, but focus on the customer.
Yeah. Thank you, Sven. I think that's quite insightful. Especially, I like the way you talked about the emotional engagement as well. It's not just about service. It's not just about getting banking, but how do you plug the customer emotionally? How do you, let's say, keep the stickiness going, right? If I may use that word. How do you make the customer stick to you? What makes your customer always want to come back to you? And that's where I also feel somewhere the whole idea of the ecosystem comes in. Because by creating a larger ecosystem, you are making the customer get a lot more value than if you were as a single player, right? Let me just take that question over to Steve at this point. Steve, I think you spoke about your under the hood, you are really a platform, right? You said at the beginning, right? You are really creating a banking platform. You are not really seeing yourself as a regular bank. Of course, you're a regular bank for all intent and purpose to the outside world, but under the hood, you are really a platform which can do a lot more things. And you spoke about collaboration right in the beginning about your tie-ups with partners and so on. So what's your take on this question, and how do you see the whole ecosystem game playing out? Do you see banks as creators of ecosystem? Do you see them as just participants in the ecosystem? For example, today, right, if you just buy something on Alibaba or Amazon, you can take a loan, you can take an instant EMI payment, but somebody behind is servicing that loan. Somebody's taking credit risk on, right? Some established bank probably is buying that loan from their books, and they're going to take that risk onto their paper. So in that transaction, for example, it's Amazon or Alibaba creator ecosystem, right? The bank is just participating. So how do you see this playing out? Do you think both will happen, and how do you see this whole thing going along in future?
I think Venkat, both Gal and Sven talked about this, and there's a customer at the end of the day that has a certain set of needs if they are going to live a better life. And if you are a bank that has that customer, or in our case, a corporate partner, you need to understand what it is that they need. And if you don't bring it to them, then someone else will, or they may go and find that. From a, well, how do you do that perspective, we have certainly adopted a partnering philosophy. So unless we think that we can build something better or quicker than somebody else, we will partner. And I think Gal mentioned that too, 6 or 7 years versus 6 or 7 weeks or 6 or 7 months in some cases to get things to market. So we certainly will adopt the partnership approach. Now that could be a firm like TCS, and with TCS we have built a payments hub, something that is very, very innovative, something that I haven't seen before that will be very disruptive in the market and will help both our corporate partners and their customers. We deal with some of the biggest technology firms in the world like yourself or Microsoft or Salesforce. We also, where there is a need, will select the best-in-class fintechs here in Australia. And we've done that in 2 cases. One is an open banking partner. It's called Frollo. It recently become the first firm in Australia to transfer a customer's data from a bank to a third party and is really leading the way. If I took you back 3 years ago, they were a startup like us. They had 0 customers. We were first. They co-located with us for a couple of years downstairs on the floor below me, and they become part of the Vault family, and we collaborated. They are now a very, very valuable business, and they have every Australian large bank knocking on their door saying, let's talk to you. We know that you're dealing with this neobank called Vault. And that's a great feeling of satisfaction to know you helped someone that was struggling to get a start that is now really flying. If I think about another partner called Verency that helped us out with our payment innovation, they built stuff that was so far ahead of what we could have done in 4 or 5 years. We partnered with them. Again, they had no customers. We were first. They will end up being a global success story. So do what you need to do for your customers, or in our case, for your corporate partners. And if you don't think that you can build it quicker or better than anyone else, make sure that you're selecting the best partners and leverage that partnership or those partnerships as best you can. That's the Vault philosophy, at least.
Absolutely great. I think I'm conscious of time, gentlemen. I would maybe jump to one last question now before we move on to summarizing this and go to the audience. But I think maybe if I just have to think of this, step back a little bit and hearing all of you, I think fundamentally all of us agree that banking has been done in some way, and all of us think the future of banking will be very, very different, right? And if you take next 5-year, 10-year view, I think we don't know what's going to happen, but I'm sure it will be nothing like what it is today, because each of these things that all of you are doing is going to gather some momentum, get critical mass. So maybe a kind of a future question, if you will, what do you think is the future? I mean, how do you think banking will look like 5 years out, 10 years out? What do you think are some of the broad defining characteristics of how a bank might function, how a bank might look like or do? Paint a picture for me, a couple of minutes, maybe from each of you. Maybe I start with Steve. I'll start with you, Steve, maybe. And let's go to all the panelists and hear from them. How do you think of the future?
So Venkat, there's no doubt that banks are going to have core competencies and leverage assets like the cloud, and we're going to need to be strong on cyber security. Those things will become a hygiene. But Sven and Gal sum this up very well. If you are genuinely going to help your customers do better, in our case we call it live better financial lives, then you're going to need to be as much a data company as you are a bank. So if you want to help people on their journey, you need to understand what they are doing, and you need to understand it in the moment. So particularly with real-time data analytics, they will be key. You need to understand, and we talked about behavioral economics. People are human, of course. They are not perfect, and they will have all the ill disciplines. Banks typically have shied away from going to the embarrassing territory. If we have customers that can't walk past their favorite clothing shop without a magnet dragging them in, and they buy something and they may regret it later, or they have a gambling problem, we should understand that and be there and let people lock themselves out, those sorts of things. Or if we know that they're saving for their first home deposit, but we can see them at the pub on a Thursday night paying for a couple of rounds of drinks with their Vault card, maybe a little cheeky nudge that says, Venkat, we know that you're saving for the deposit and you're clearly having a good time. How much of a good time do you want to have? Those sorts of things we kind of laugh about when we have, we joke about them. But genuinely, if we want to help customers in a way that banks haven't in the past, banks will become data companies.
Maybe over to you, Gal, now.
I think I think there's 3 things that I see will kind of shape this industry in the future. I think the first is the idea of banking as a service. I think it's going to change the way we think about banks. I think it's going to change the amount of banks. I think it's going to change the idea of what a bank is. The same way Amazon, AWS allowed anyone from a computer, 2 guys in a room to open a company and relieve them from the idea of working with storage or DevOps and all the infrastructure. I think the idea of banking as a service is going to change everything we know about banks. We're going to see many banks, small banks, big banks, niche banks, corporate banks, retail banks, cell phone banks. We're going to see tons of stuff. So I think the idea of banking as a service is a complete revolution. The second thing, as I said, I think the idea of AI, that will putting AI tools to enable banks to have a fraction of the people and the additional cost they have today. I think this is also dramatic. We're going to see banks that have 10,000 people in their back office today, reduce it to 100 people. They have, 5,000 people in their call center. We will see call center with 5 people. A lot of things are going to be self-service. A lot of the things are going to be proactive. A little bit like the example Steve gave. Some of the things that today we expect people to call us because we are reacting to their issues, problems, insights, actions. With smart tools, we will be proactive. We will tell them in advance what they need to do. So we will reduce the need to put people in our call center, and we will give them a much better service. So I think this is a big dramatic change that's going to change how many people work in a bank and how fast the service that people are getting from us will happen. And I think the third point, which I think Sven and Steve talked about, which we believe so as well, I think the idea of a bank being kind of a one-stop shop, I think will grow more and more and more, because the technology will enable open API, open banking. I think there's something about a bank, about a checking account. It's the epicenter of your life. This is where your salary comes in. This is where your trust is. So you trust the bank, your salary comes in. Now build as many things around it as you can, and you will become a one-stop shop. We see a little bit of those things happening in China with some of those super apps. I think we will see mutations of it. I think what Sven is doing probably in Sweden sounds very much like that, and it sounds pretty exciting. We will see every country, every market taking a little bit of a different take of what does it mean to do a one-stop shop. But I think we will see not just a Citibank that does branches, loans, deposit. We will see kind of a central hubs that revolves around our data, our cash, and our trust. And I think that's going to change the way we look at things.
Great, wonderful, Gal. I think let me put that same question to Sven. Maybe briefly, what do you think is the future that you see for banking, and where do you think banks will move from here?
Well, I will actually add what Steve and Gal have been talking about, and it's obvious the world is changing and it goes fast, and we will talk about the ecosystems, the open APIs, the partnerships, and all that. But I'll give you 5 predictions. The first, and Gal was into that, we will enter a trust economy. That's what I call it. It will be a trust economy. It will be the one not only with the greatest or strongest balance sheet that will win. It will be the one that can gain and maintain trust for the customer that will win. And let me be super clear on this issue, because this is going to be the topic for the next coming years. It is, you have to make sure that the partners that you connect to, or the ecosystem you are the creator of or a part of, has to be or has to manage trust. Otherwise, it will be devastating for your brand. Local, second, local will be even more important. And local is not local as a place, it is a feeling. So you have to be local in a sense. It will be even stronger further on. Service, both Gal and Steve talked about that. Service, you have to handle the customers in all situations, not only when you talk about the banking services that you offer. You have to take care of the whole cycle of the service. And of course, COVID-19 has sped up the tempo. You have to set out an organization that is ready for change and that is willing to change every day. As for me, I mean, the management team that I have, they're always into a new thing, and that is what. So you have to have an organization that is always into the top of changes constantly. And then lastly, sustainability. I would argue that the coming years, it will be even more important that you're part of building a better world. Not only climate-wise, because that will be hygiene factor, but you have to take social responsibility, because those two will give you the economic growth. And then, as a summary of what Steve and Gal said, pick the right partners, pick the right ecosystem, and of course, for us, TCS has been one of those strategic partners that we are with and will stay with.
So, just for all the audience benefit, we had recorded that whole session some time back, just to de-risk from any technology glitches, if you will. We are back live to take questions from the audience, and we do have quite a few questions. Before I go there, maybe I just spend a minute or so summarizing some key takeaways for me personally today. I think for me, a few things that I really felt were driven home very well by the panel. Firstly, it's fundamental in business. It's about being relevant to your customers, and I think that's what I think every one of them spoke about: the customer experience, customer satisfaction. It's not just about let's say the app experience, but an end-to-end. How do you touch the customer's lives? And leading from there is the whole idea of the ecosystem, because that creates a loyalty, that creates a certain different level of customer engagement, helps us connect emotionally better, so on and so forth. So I think the whole starting point and premise is all about the how banks can be more relevant to customers, engage with them better, and be a part of their lives and embed themselves more and more into the lives of the customers. I think that's one broad message that I personally took away. I think on technology, many things were spoken. I think clearly data and AI is going to be all pervasive. That's something that very clearly to me is very evident, and power of data is something that we are probably just beginning to see getting leveraged in banking. And as experiences get more and more contextualized with data, we are going to see a lot more creative approaches to handling this and going forward. Of course, always keeping in mind the whole privacy and the line to tread that carefully and so on. I think it was Gal, I think, who mentioned about banking as a service. I think at the end of the day, I think both Gal and Steve spoke about that important point. End of the day, under the hood, if you will, it's a technology platform that matters a lot, and that's what is going to deliver the whole experience that you want. It's a thing that is able to give you an ability to create services, offer them to customers quickly, and so on and so forth. I think there are multiple elements. I can go on and on, but I would. The couple of things that I want to add from my side are, I think, Steve, you spoke briefly about cloud, and maybe we'll pick it up in the Q&A if we can. But clearly, cloud to me seems to be a very, very relevant topic, and I believe cloud, we see cloud as becoming a lot more fundamental to many businesses, to many banks going forward than it is today. Today, still we are seeing pockets where it is getting leveraged, but large parts of banking still is not on the cloud, and that's something we see changing in a big way in the years to come. And I'm also wondering, the one thought that keeps coming to me is the retail kind of an analogy. Are we seeing a world where will we see a world tomorrow where manufacturing and distribution sales will get decoupled in a sense? Will we see manufacturing of banking happening in certain pockets and some other players coming to take over the sales and distribution? Again, I wouldn't say this is something new. It's already happening into some way with the fintechs and so on. But this may accelerate is one sense that I sometimes carry. So on that note, let me go to the audience questions. Yeah, so welcome back to all of you, and good to have you here. I think this is something that we didn't discuss so far in the panel, but I mean, I chose not to ask questions on this topic because this is so much in your face. It's about the whole pandemic and everything. Like in a way, that's something that's a big undercurrent now in the last nearly we are closing on a year now, really. Maybe this question I will ask this to Sven. Sven, how do you see the whole pandemic situation panning out, in the sense that do you think it's going to impact in the future? When you spoke about the future, right? How has the pandemic impacted that future in terms of accelerating some of the things that would have taken more time, perhaps, or has it made you as a bank focus on some things that you didn't focus earlier? What is the impact from a customer standpoint, from your own organization standpoint? How has this whole thing been for you, and also for the other banks around the world? What are some of your thoughts?
I think most of the topics that we talked about during this session, if you look at from a pandemic point of view, I would say that everything has sped up. Most of what we tend to see, the business model, everything will be more digitalized, and the customers will of course request all the services to become digital. But currently we're right in this pandemic, so we haven't seen the long-term consequences. We can only view from a short-term perspective. But I will still go back to say that we have maybe the speed of change has increased 5 times just due to the fact of the pandemic. So it becomes more important for the organizations to become more adaptive to the situation. That would be one point. At the same time, you have the employees that are also requesting every services to become digital. So you have on both sides, both the employees are changing, and of course the customers' requests are changing. So the adaptability to change is even more important right now. But back to what I ended my questions regarding the future predictions, I would say it will be trust, it will be service, sustainability. Those questions will be even more important. But we are right in the pandemic right now, so we haven't seen the long-term consequences. So maybe that will change. But I will say speed, adaptability.
Sure, Sven. I spoke briefly about cloud a minute back. I think this I'll switch to Steve. Steve, I think cloud is something that you mentioned. I remember briefly when you spoke on some of the future, and you almost mentioned it like, cloud is fairly basic, right? Cloud is practically hygiene. I think something like, on those lines is how you spoke about cloud. But we don't see that globally happening still. We still see many of the incumbent banks, resisting cloud migration. There is surely a trend to move to cloud. I have no doubt on that. But do you see a future where, cloud is pretty much default? Do you see cloud as the very basic fundamental thing? I know it's obviously it enables a number of things. It enables agility. It enables, openness and so on and so forth. Having known the benefits of it, we still see resistance in many pockets, right? Yes. Where do you see this thing going, and how fast do you think that acceleration will happen? I mean, of course, Sven spoke about the pandemic. Even there's been a big accelerator for many cloud-based businesses, even, right? So in a way, it's topical as well. So what is your take on cloud and the overall cloudification journey?
Yeah, I guess for a new player like ourselves, cloud was kind of hygiene because you were starting, and just the lower cost you pay as you go, and the speed and all the tools and the agility that comes with that is a given. An interesting insight, though, is here in Australia, where there is a really live issue about incumbent banks moving onto the cloud. If I go back to the end of 2017, when we were first talking to the regulator about our proposed technology stack and that it would be cloud hosted. And it was a difficult conversation, because when you looked at the cloud regulations that were written in 2015, even at the end of 2017, they felt like they were written 10 years ago. And so there was quite a job in helping educate the regulators about the benefits of cloud. And I remember saying, look, if you have any new players like us that aren't going to come with a cloud proposal, you really should look long and hard about licensing them in the first place. If I then fast forward till the end of 2018, the head of the Australian regulator gave a speech one day where he announced the regulator's new cloud policy, and it was modern for the time. But in that same speech, he put the boards of the larger incumbent banks in particular on notice that it would no longer be acceptable for them to delay decisions like moving onto the cloud, replacing core banking platforms that were 30 and 40 years old. And whilst all of those things are really difficult, they actually can represent a systemic risk to a country's banking market. So you have, I think, this combination of incumbent banks seeing the benefits of cloud and knowing we have to do it at some stage, we have to bite the bullet. And then you're even seeing regulators who were like, cloud, I don't want to talk to you about cloud, 4 or 5 years ago, who are now talking to boards of banks and saying, get with the program, get with the times. But of course, we shouldn't underestimate, the challenges of moving to the cloud, of changing core banking systems. They are the killers of CEOs and CIOs. We've seen that. So I understand why people will be reluctant, and it's not unusual to see a CIO of a bank saying, we have a plan to move to the cloud, or we have a plan to move onto a new core banking platform. You ask the next question, so when are you going to do it? And the answer is usually after I retire, because it's just too hard to do. But the world will move to cloud more and more, but it won't happen overnight.
I have, thanks, Steve. I think I have one question which maybe even I will answer, though the question is maybe meant for Gal, but Gal, I will try, and I think it's more a communication issue, because I think somewhere when Gal spoke, I think there was a mention that it's not just about the app, it's a lot more than the app, right? And I think the question says its first digital bank has a different perspective to build the app, not necessarily the customer experience. Will it not become difficult to build the customer base later and so on? I think Gal's point, if I remember, was more, I'll just clarify this question. I don't think Gal needs to answer this question, because I don't think Gal said the front end is less important. All that he's saying is not just about the front end. It's a lot more about leveraging the power of data, using AI to be able to deliver a very different, insightful engagement to the customer, and hook them and reach them where they have to be reached and so on. So I think Gal's point was not that the customer experience is less important. I think all that he's saying is it's not just about the customer, the user interface. It's a lot more about how much the user interface gets powered from behind. I think that's how I think maybe I would look at Gal's comments. So that's maybe a clarification.
And I would just maybe, and I think it's a good point. It's a good question. I would customer experience and apps are easy to copy. Okay, it's very easy to copy. So if you look at some of the new digital banks in the US, in Europe, a lot of them, every 2-day advance salary, everyone has quick transfers, everyone has, it's great, but it's very copy, it's very quick. So yes, you need to do that in order to enter the market. You need to move faster than everyone else.
It's substantially what you built under the hood, which, to borrow a phrase from Steve, I think, which is really going to give you a sustainable advantage. Because apps is end of the day, it's just about how you engage and how you touch the customer, but a lot of that power comes from the engine that you built and conceived, isn't it? So that's what it is. And maybe on that note, I have one more question, which I will maybe take it to Gal. You spoke a lot about AI and data and how your bank will want to be different. So what do you think of the incumbent banks, either Israel or globally? Do you think the larger banks have done a great job of leveraging data, or do you think there is a very different way to look at it? We need to be there. What's your sense on that? Bit controversial question. We'll spend also on this, but yeah.
I'll try not to try to put it gently. But I think not much has been done. I think banks are just scratching the surface. I'm not saying we're there yet, but I think first of all, the problem with AI is that today it's such a hot topic that everyone says AI, machine learning, and it's something you have to put in every deck or in your job title, otherwise you're not really doing something. So, but it's a lot of hard work. It requires patience, a lot of patience. I think that a lot of, especially traditional banks today, one of the things they're trying to do is they're trying to come up with the statements first. Something out loud that they can be but it's not about being first. First, it's about being significant and doing something meaningful. So just, putting a headline that you've done an AI doesn't mean anything. And we think about the idea of the AI that, again, I believe in. And this is under the hood. AI is a tool to solve a problem. It's not a value proposition, right? It's a tool to replace human labor. It's very simple, right? We can talk about all the science. At the end of the day, it's a tool to take people that do human labor, either your bankers, your call center, or your analyst, or your security analyst, your credit analyst, or your back office, and it's just a tool them so you can do things much faster. And that requires building first to map what are my people doing, what can we do to save time. So you have to do it slowly. You have to put the right services in order to do kind of machine learning, right? Learn what they do so you can automate it over time. And that also takes time. So, and it takes patience, right? And you want to make sure that whatever you automate and things and replace maybe your credit analyst and you replace this with, algorithms, that you do it right and you do it safely in the right way, and it requires a lot of patience. And I think a lot of banks today, again, from reading the news, they're trying to race very quickly to put a headline. And I think when it comes to good technology, it just takes time. And sometimes you just have to build it right. Again, the benefits of building a bank from scratch, that you can think about the fundamentals and build your infrastructure right, build your team structure, even build your culture right. I'm sure, I'm sure Steve in his bank is putting a lot of effort on just building the right culture, that when they want to do something smart, it takes time and people are open to the ideas, and it's, his risk analyst and his legal advisor, they know how to deal with AI algorithm that may or may not really fit the current regulation. It's not that easy. It's not just saying, oh, I'm putting in an AI team, an AI team leader, and everything works. The company has to work around it from a risk, legal, culture, technology, processes, everything, from data management, from cybersecurity, everything to be built around that thought and around that notion. I'm not saying we are fully successful in it, but I think we understand that that's the challenge. And the challenge is not just doing AI, because consumers don't care about AI, just want good service and good prices. So if we think AI is the answer to reduce the amount of people who work at the bank, so we can lower our cost and we can roll it to our customers and we can give them dramatically better prices. And if we think AI is, can help us give them personalized, insightful, light speed service on the spot, because they don't need anyone in the back office to review something or go call his supervisor or take 2 business days or 5 business days. I think the whole idea of business days is about today, because who cares about waiting 2 business days? Everything needs to happen like this. And I think if you have the right technology, you can do that, but that takes a lot of time. So I think knowing when you want to go, putting the right kind of North Star on it, and having the patience and the ability to build the infrastructure to take you there, I think that's the major benefits of building something from scratch.
Yeah, thank you, Gal. I think that in a way almost answered the next question I had. So I think in a way we're also short of time. I can see we are about a few minutes past the time we set for ourselves. But there are a couple of also comments or requests from the audience to see if a recording of this event will be made available. Yes, we do confirm that we can make it available. So that's just for some of you who have asked that question. I can confirm that we can make a recording available to you on request. So on that note, I just want to bring this conversation to a close. Personally, it's been very enriching for me, and to hear from 3 stalwarts who have been there, done that, and continuing to be there and do that. It's amazing, and I think you have covered a whole range of topics. And as I always believe, this is impossible to do justice to this kind of topics, this kind of topic in an hour or so. It's something on which we can speak for days on each of these subjects, but in a short time, I hope the audience got some key takeaways in terms of how you think of a digital bank and a bank of the future, and where banking itself might head in the days to come. So thank you once again, and thank you to the audience for your patience and for all the questions. Thank you, Steve, Gal, and Sven. Thank you very much. Appreciate your time. Look forward to catching you sometime soon in the real world. Thank you.
Thank you very much.
Bye, guys. Thank you so
Thank
much.
you. Yeah, bye.